Ryan Reynolds here from Mint Mobile. I don't know if you knew this, but anyone can get the same premium wireless for $15 a month plan that I've been enjoying. It's not just for celebrities. So do like I did and have one of your assistants switch you to Mint Mobile today. I'm told it's super easy to do at mintmobile.com/switch.
Upfront payment of $45 for 3-month plan, equivalent to $15 per month required. Intro rate first 3 months only, then full price plan options available. Taxes and fees extra. See full terms at mintmobile.com.
Reality radio for a really great future. We're talking real money.
Oh, Canada, our homeland. All right. Hi. Why did I open with the Canadian national anthem? I'll tell you in a minute. Welcome to Talking Real Money. I'm Don. That's Tom. Oh, he's wearing the Deutsche Fußball.
I'd like to hear the pronuncier on that one. Yeah, go ahead.
What is it? Deutscher? Deutscher?
Yeah, you got that part right. Yeah.
It is German.
Yeah, okay. All right. That's pretty close. Yeah. It's the Fußballers of Germany. You got that part going. Well done.
Okay. Wow. This is an
green. It's a green
show.
day. Yeah. How about that?
Yeah. Canadian flag is red.
I know.
Red and green. We got all this going on today. Hi again. Don McDonald here along with Tom Cock on the show we call Talking Real Money for the very obvious reason that we talk about real money issues that really affect your life. And we really do want to help. That's why we've been doing this since nearly the beginning of time.
No, I think it was when the earth cooled, actually.
Well, yeah, it was a little hot prior to that.
You bet.
Talk about global warming. Whew. That was some steamy earth. 855-935-TALK. That is our phone number, and we just decided to make this a deal. We're just going to keep giving books away to people who call the show. Which book? Financial Physics, the book, of course.
Yeah, and you sign them and send them out sometime in the late 23rd century, somewhere in that area. So that's coming
I get all those. Man, that's a pile of books.
I know.
A lot of people called.
You need a new right arm. So
I'm telling you, I'm getting cramped. I'm getting old and getting cramped up in this.
Great book. Great book.
And so call, get an answer to your question, and get a book. 855-935-TALK, 855-935-8255. Do you know why I sang "Oh Canada" there?
No,
at the
I really
beginning?
have no idea.
I know you had no idea. Yesterday on the Daily Podcast, I got a call from a guy in Canada who wanted to start investing for his retirement. Now, if it was a call from the United States, he just wanted some ideas, and he wanted it simplified. And I thought, what could be simpler than our two-fund solution?
At the Vanguard, Vanguard Total World Stock Index and the Vanguard Total Bond. Boom.
Right.
Yeah.
So I thought, until the guy in the call, the whole time I'm listening to the call, I'm thinking Vanguard Total World, Vanguard Total Bond. This is going to be easy. Boom, boom, boom. And then he said, the last sentence, "Oh, I'm in Canada," and I went, "Uh-oh." I just realized.
Wait a minute. Isn't it the other border where they're building the wall? You can still get in and out of Canada,
right? You
can
still get in and out.
All right.
But our mutual funds apparently can't get into Canada.
They're locked out.
They're locked out of Canada. So those options were not available. And so I started doing some and since we're close to the border with Canada when we do the show live.
We are very close to the border.
We may have Canadians listening right this very moment going, "Why don't you help us?"
I think that's
fair.
We're
going to help you.
And we have, by the way, we have a lot of podcast listeners, I think. Not as big as we are in China do you translate this on the weekends? Do you do Mandarin on Sundays or something? I have no idea, but we have a lot of people in China that listen to the show.
They're apparently far better at English than we are at Mandarin.
That's a good guess.
Anyway, so there are a lot of them. So anyway, I went doing some looking, and it turns out that there are index funds. The vast majority of money in Canada, though, is still in actively managed mutual funds.
I can remember 20 years ago when every only fund you could buy in Canada had a commission on them. There was no load, period, nothing.
Right.
Good Lord.
Well, now they have no load funds, and now they have some indexes. But they have not reached the point of us yet. They, for example, at RBC, Royal Bank of Canada,
which is huge.
They have a U.S. index fund, which is similar to the S&P 500 fund. Its expenses on an annual basis,
how much?
0.69%.
Which you could buy an S&P 500 index fund for about zero here, right?
Zero. At Vanguard, I think it's like 0.05.
And I think Schwab has something similar. Yeah, so that's 10 times by my measure.
I was sitting around going, well, why is Vanguard there? And I did some checking. Get this. It wasn't until 2018 that Vanguard funds entered the Canadian market.
Whoa. No Vanguard in Canada till last year?
Till last year.
That's
crazy. They only offer 4 mutual funds, actual mutual funds. Every one of them, get this, actively managed. They only offer 4 actively managed funds. Windsor, a version of Wellington, that kind of stuff. But
that's
they
crazy.
do offer, this is for all of you in Canada.
Well, you already did the anthem. Isn't that enough? So, I don't know.
Land of the Maple Leaf.
Yeah.
Land of hockey.
Yeah.
Land of A.
Yeah.
There are funds. There are ETFs that are pretty good.
Oh.
There's a total U.S. Canadian dollar hedged, which is VUS. And there's an aggregate bond fund, VAB. So we do have a semi 2-fund solution for you there. We'll be back.
Tom and Don are talking real money.
Do you need a little help with your investments? Set up a free, no-obligation appointment with one of our advisors at TalkingRealMoney.com.
For your real life and real future, Tom and Don are talking real money.
Call us anytime, 855-935-TALK. 855-935-8255. You're on Talking Real Money. I'm Don. That's Tom. And I forgot a fund for you Canadian folks.
Go
for
back
all
because,
of our
friends
if north of the border.
So if you're in Canada and you need to, here in the United States, we give you the 2-fund Vanguard portfolio. By the way, for full disclosure, the reason we give you the 2-fund is because it's simple. It's pretty good. It's not great. If you want better. And I sent somebody
Call
this
us
morning.
And become a client.
But you could go. I sent somebody to Paul Merriman's website today because he has a 10-fund Vanguard portfolio that I would suspect if you build it and you rebalance it and do all the work you need to do, it would probably perform better. There you go. So you can go to paulmerriman.com for that. But if you're north of the border and you can only invest in Canada, we have a 3-fund portfolio, which is
Vanguard ETF Solution.
Yeah.
VUS.
VUS.
Which is the Vanguard U.S. Total Canadian Dollar Hedged portfolio.
You don't need to add that, but okay.
I forgot this one. VEF, which is the Vanguard Developed World Canadian Dollar Hedged, VEF. And then for your bonds, VAB, and that's Vanguard Aggregate Bond Fund.
Which I'd love to know what that holds, but
it's Canadian bonds.
Okay,
it's all Canadian, which is great.
So is it that funny money then, or is it other money then?
Canadians probably consider our money funny.
Yeah, but ours isn't called the loonie, so I don't know. Just saying.
I know.
Just saying. So okay, fair enough.
I'm
not picking on Canada. Love Canada.
Yeah, you are.
Love Canada.
No, you are.
Great
and
place.
For somebody who lives as close to Canada as you do, that is a dangerous thing.
Aren't they putting up a wall or something? I don't know.
They've been known to cross the border and take out people like you.
I know, because you think my house is like, you think from my house you can see Canada.
You can. And Russia.
Isn't that Canada right there?
You're an anti-Canuckian.
Canuckian. Come on, don't make it crazy now. Canuckian? Is that a Canadian who sings in a bar or something? Yeah. Canuckian?
I don't know. We're going to have a little karaoke here on Talking Real Money. 855-935-TALK is our phone number. So those are your funds, Canadians.
Right.
You don't even have to say thank you. Go ahead, get those funds. Now,
if you didn't hear them, you could say A, but that's another store.
Now we'll go to another state from which you can see Canada almost, Pennsylvania. And Craig, welcome to Talking Real Money.
Hey, Craig.
Hello, Don and Tom. How are you?
We're doing great. How can we help you today?
Well, I have 9 grandchildren, and I have 5 29s for each of them. They range in age from 1 to 13. I have average about $20,000 each in them. And
you are one great grandfather. I got to say that, man.
Well, we try to help out when we can.
Good for you.
But they range in age from 1 to 13. Several years ago, I lost track of Dawn, and I...
Me too, by the way. It's some of the happiest years of my life, frankly.
There was a silver alert up on the screens on the highway.
Have you seen this man? No, we have not. He's still on a couple of milk cartons, I think, in the Midwest somewhere. So go ahead.
Yeah. Well, with the way the politics were going and what I thought the economy was going to crash, I put everything in cash. It's been about 5 years.
Wait, whoa. Your kids your grandkids 529s in cash?
That's
Yes,
what he said.
in a money market, And that was a mistake, I realized.
Craig, we were going to try to be nice to people today.
You lost track of me.
In more ways than one.
Nobody was holding your hand through that, huh?
That's right.
Craig, I would have been holding your hand through that. I would have said, Craig.
So what the question is what to do today?
Chill.
Is that your question?
Yes.
Okay, this is easy.
Where's the 529?
Oh,
Where
okay.
is it right now?
Well, I have 5 of them at Schwab, 2 at Vanguard, and 1 in Alaska through T. Rowe Price.
Okay. I mean, here's what I would do, because this is an easy solution. You don't really have to do much. I would simply, and I don't think Schwab has an age-based plan. We'll have to look. But if you go to Utah, the Utah 529 plan, for example, which would take a little work because you have to set up one for each of the 9 grandkids, but you set those up, and then they'll move the money from wherever it is to the Utah plan, and it's age-based, so they will build the appropriate portfolio for a 1-year-old, which would look different than somebody who's 13, right? Because at 13, you're going to have a few bonds in there because you're getting within 5 years of using the money. At 1, it's going to be 100% stocks. Now, you don't have to think about what's going on in markets, all the rest of it. It's all set. It's, set it and forget it kind of portfolio. I mean, that would be my easy solution. The only issue you're going to have is you're going to have to open those 9 accounts at a different custodian. That's going to take some time.
I concur, and I would absolutely do it for a couple of reasons. 1, we know that Utah's plan has very low fees. 2, we know that Utah's plan has very good funds. And 3, we know they have those age-based accounts, so it takes the guesswork out. They move the money for you at appropriate ages. And then, let me add 4. Don't call them and do anything with it from then on.
Yeah, I mean, that's the other advantage for Craig is you won't be in the middle of all that depending on how you feel about what the future looks like, because feelings are great for your grandkids, not great for the grandkids' money. I put it that way.
Mm-hmm. Okay.
So you just go to, I think it's, what's the website, Don? What is Utah?
My529.org.
My529.org. I would simply go there, open the accounts. They will help you. I mean, you could probably, after once the accounts are open, get on the phone with them. They'll help you move the money over, do the age-based program. Boom, it's all done, and life goes on.
Okay, very much. Thank you very much. I appreciate it.
My pleasure, by the way. I'm seeing my grandsons tonight, man. Woo! And you had a nice video from your granddaughter today, too.
Yeah, I was trying to play it.
Oh, that was a classic.
Yeah.
Oh, you're trying. Yeah, we're not hearing it, but
it's not playing. My granddaughter was in the car with my daughter, and she and my daughter said, "So who do you want to go see?" And she goes, "Grandpa." And she goes, "We're not going to see Grandpa right now." She did the biggest, loudest, most fake cry.
That was a real cry. Come on.
That was not, because she did.
I thought it was real.
You always know it's a fake cry when they can instantly stop it without any.
I thought they had me at the first wail, but okay, I guess not. Yeah. So, all right, that was pretty cute. Pretty cute. So.
I can't set up. I got a problem. I can't set up a 529 for my oldest grandson. Do you know why?
Because
my daughter doesn't want anyone anywhere to have his Social Security number.
Well,
we freaked people out so much. Thanks, Herb Weisbaum.
We're going to blame Herb for this one?
I'm going to blame Herb.
Yeah, I mean, if you're not willing...
Don't give your Social Security number to anyone. Okay. Well, I need it for setting up the 529s for
I know
grandkids.
A place we could go get it.
What?
Yeah, I don't want to publicly say this, but yeah, I could get it for you.
Wow,
I'll log into the dark web and get the info.
You are more nefarious than I thought.
Exactly. That's too bad because 529s are great. By the way, 529, for those of you who don't know, is a great program because you put the money in, right? And then when it comes out tax-free. It's absolutely wonderful. It has to be used for educational expenses. But if you do any other type of investing for a child and you take it out after growth, you're going to pay tax on it. So the 529 is really a great program.
And we really do like the Utah plan. And no, we don't get compensated by anybody we suggest. Anybody. Well, except Vestry, which is our firm. Of course, we compensate ourselves.
Tom and Don are talking real money.
Do you know what your investment risk tolerance is? Take our free no-obligation risk quiz at TalkingRealMoney.com.
your guides to a really great financial future. Tom and Don are talking real money.
Well, Brian, nice job on the ball.
Yep,
Brian screening the calls for us today, and he came in and said, yes, Schwab does offer age-based 529 plans. So, Craig, you could keep it there.
Yeah, he could leave the four. I think he said 4 of them were at Schwab. You could leave those there, move them to the age-based program, and then take the other ones and go to Utah. That's what I would do.
And then, no matter whether you hear my voice on the radio or a podcast or not, you do not try to guess what the market's going to do. Craig is another, I hate to use people as examples, but I don't because I do it all the time. Craig is a great example of why you should not follow your hunches. Oh, I know I'm right. I know the market. Like right now, everybody's saying, oh, the market's at all-time highs. What are we going to do? We're going to talk about that today. We are going to talk about it. We are going to have a serious talk with you, young man, young woman, all of you out there listening. You are in trouble. 855-935-TALK is our number, and Robert, you're next. Welcome to the show.
Hey, good afternoon, guys. How you doing?
We are having fun. How can we help you today?
Well, I have a couple questions, actually, but let me get to the most important one first. I retired last year, and right now my entire 401k is sitting with Fidelity, in the 401k account, not, hasn't been rolled over yet. And so I wanted to take a portion of that and roll it over to Vanguard to be able to do a Roth conversion, possibly next, at the end of the year. And so I talked with Vanguard, and I was talking to Fidelity, and the guy mentioned something that I was completely unaware of, and he said that like 53,000 of my 401k has already been taxed, and so therefore I could just move it direct into a Roth account.
That's correct. It was a Roth 401k, money that you paid tax on. Then it went into the retirement plan. Sure, that's right.
Yep, that's immediately convertible to a Roth.
Really, I had never heard that before, and it just so would they provide me with the documentation to be able to give me the exact amount for for tax purposes?
Yes.
You're asking whether Fidelity would have it?
Yeah, Fidelity will have the exact amount.
Sure.
Okay.
Without a doubt.
Interesting. That is such a gimme. I would have thought that I would have heard of something like that.
Well, for so many years, and it's a relatively recent innovation within 401 plans. Yeah. But for the most part, people think of 401s as tax-deductible, tax-deferred vehicles. But in fact, for a while, there have been these already taxed accounts, which are called a Roth 401k, just like a Roth IRA. And they're a great way to save. If you have it available to you, it's wonderful.
Yeah, and I think if you're young, you may be, and depending on your tax situation, it might make sense to break it up, have half or some amount go in pre-tax and have the rest go in post-tax, because then you got different pots of money. But
I got to tell you though, my inclination is to lean always toward the Roth if you are going to be a saver your entire life, because if you're a great saver and investor, there's very little doubt that you're going to end up in a higher bracket when you retire than you're in while you're working.
All right, what's your other question real quick, Robert?
I retired at the end of the year, so this is just a standard 401k, so I can still do that.
A standard so now you get me confused about where the money is.
It must have some Roth money in it if it got taxed already. Or you put in some post-tax contributions.
Some post-tax contributions went in.
Yeah, and you can make
it on my paycheck.
Yeah, you can make post-tax contributions, and those aren't. While they're not a Roth, they are subject. They are not subject to the same rules. They can go right into a Roth because they never got that benefit of being tax deductible at the time. So you're good to go. Enjoy it, and also I love the idea of the occasional Roth conversions. Do some pre-tax planning. Make sure you don't creep into a higher bracket. 855-935-TALK is our number. Stop by.
Tom and Don are talking real money.
Just about everything you need to know about money can be found at our website, TalkingRealMoney.com.
Reality radio for a really great future. We're talking real money.
Only because money is really, truly important. There are a lot of important things in your life, but when you head back to their ultimate solution, their ultimate cause, money's at the root of a lot, including all evil.
Just ask Robert Kraft. He'll tell you. Anyway, okay,
Love of money is
too easy.
You know, Robert could have afforded a higher class facility.
I think so, and maybe even at his house. It just feels very strange.
Yeah.
And showing people his ring? I don't know. It's kind of weird, but okay.
Hey, you know, people have their own weird things. I don't ask. Don't ask, don't tell, don't do anything.
Did you give
Just
the number?
Talk about money. I love talking about money because it's such a clean topic, though.
Oh, yeah, right. It's always so pure.
Well, we can talk about almost anything.
Well, that's
we're not
true.
going to get censored. We're really not going to get censored for money talk. Not really. Although, some of these other podcasts and radio shows, the stuff they say. 855-935-TALK is our phone number. 855-935-8255. I always thought about doing one that was just saying bad words, just so I can get an explicit on the Apple Podcasts.
Yeah,
because if you have an explicit, I think you get more listeners. I don't know why.
And I sometimes feel like that when people ask me, what do I do with my money now that the S&P 500 and NASDAQ are at closing records?
You know what's interesting? Before we get into that, last week I do the market reports on Como, and last week was one of the more boring movement weeks. And yet, last week was when the S&P and the NASDAQ hit new highs, and they moved up up 2 points. It didn't take much to get them to these new highs.
I know.
But yeah, what do you do? What do you do when the market's at a new high?
You start gnashing your teeth. You jump up and down.
You move all your money to cash.
Yeah, no, that was Robert. No, that wasn't Robert. That was Craig. No, I mean, you do really, let me think. Nothing. That's it. But the question isn't so much what you do if you have money already in the market. The question always is, I now have this money, and I want to invest for the future, but I don't want to do it now because stocks are at record highs. Then what do you say?
The same thing.
I was waiting for that. How come?
No, just put it in. You do what you've always done. If you're making money, if you have money, the money should be going in to the stock market in the right allocation for your tolerance for volatility. Remember, we need to take the word risk out of your vocabulary.
Yeah, because that sounds like you're losing everything.
Yeah, when investors hear the word risk, they think Vegas, lottery,
right.
I can lose everything.
Yep.
It's not risk when you're owning the entire global economy. It's just not risk.
Unless
the world explodes.
Exactly. Then maybe money's not. This show probably isn't on the air anymore. Then at that point,
all bets are off at that point.
So it doesn't matter. Okay, but this is we're being kind of silly about a topic that does come up very seriously. So I'm going to ask you, what about a dollar cost averaging strategy? You take some, put it in now. You take some more, you put it in 3 months. You put some more in 6 months, 9 months, etc.
Okay, if you have a wad of money just sitting there.
Let me check. I don't think I do, but I'll find out.
Then, in my opinion, it is a dumb idea to dollar cost average a lump sum.
This is a lot for me. I have $31 in my wallet.
That you foolishly kept in cash for far too long, apparently.
Okay, but let's say you came into an inheritance of cash.
Well, then put it all in the market.
How come?
Because the market goes up 3 times for every 1 time it goes down. The market goes up 75% of the time.
In what periods of time? Years, okay. Because days, it's like 51% to 49.
Yeah. That's so you don't pay any attention to
days.
It's
like 60% of months or
40, yeah.
Something like that.
But when you look at years, it's 75-25 because the market investing in the global economy through stocks is a long-term endeavor. Here, let me compare it with this. If you started a business, would you start the business on Monday and sell it on Thursday? No. You would, when you invest in a business, you invest for the long haul. It takes time to build wealth, to get customers, to grow your company, and that's like all the other companies out there. It can take time. There are setbacks that occur. You never know when those are going to happen, so you have to have a long-term attitude. And the other thing you need to be very careful about is thinking of profits that you have made as being money that you already earned. Because that's one of the reasons people want to get out of these highs.
What do you mean? What do you mean?
Well, when you invested 10 years ago, in 2009, before the market started going up, you invested a lot of money then. It's gone up over the years. You've tripled your money over that period of time. You put $100,000 in, you think that $200,000 you made is your money, and boy, if the market goes down, I'm not giving that up. So you think, I'm at a high, I need to sell to protect my profits. It doesn't work that way well because it requires perfect timing, and perfect timing requires an ability to predict the future, which is literally impossible.
Tom and Don are talking real money.
Would you like to talk to a real investment advisor for free? Set up an appointment at TalkingRealMoney.com.
For your real life and real future, Tom and Don are talking real money.
Only because it's really important. Dealing with money is something we all do all the time, and one of the things you should be doing with your money, and a lot of people aren't doing apparently, is saving it for retirement. Saving it, not just saving it, but investing it properly for retirement, not playing with it, not speculating with it, not doing dumb things with it, and apparently not even listening to AAII when it comes to investing your money. I have been so angry with AAII lately, the American Association of Individual Investors. They send me all of these awful emails about these tricks they have for beating the market.
Knowing what types of stocks to buy, avoid getting into a stock too late, finding the time to do stock analysis, plus the ever-present uncertainty surrounding knowing when to sell. This all from Charles Rotblut, who is the...
Rotgut? What?
No, it says Rotblut. I'm reading it. He's CFA.
I'm just saying. It sounded
which means
like
he's a smart guy, and he's also the AAII Journal editor. I don't care if they run around telling people to buy individual stocks. I think it's poor advice. But here's when I get excited.
I do.
Yeah, here's when I get excited. When they start quoting, when they start affiliating their program with a guy named Eugene Fama, who won a Nobel Prize for a thing called the efficient market hypothesis, which really kind of says there is no way to beat the market by finding inefficiencies. Buying Amazon when it was $100 instead of whatever it is, $3,000 today, whatever. That's what Fama says. And yet here in this article, because they're suggesting you buy value stocks, momentum stocks, and quality stocks, they are saying, well, we're going to invest just like Gene Fama says. That's a little like the American Tobacco Institute saying, no, that's not even good enough. How about somebody saying tobacco, yes, we know smoking is bad, but you really should support the tobacco industry. And this is horrible. Horrible advertising.
Here's the thing, is what they like to pretend they've got at AAII is some insider secret. Ooh, we found the insider secret. Well, Eugene Fama and Ken French, two very respected professors in economics, came up with, along with a number of other people, various factors that have shown a tendency to improve returns over time, but they also tend to have higher risk associated with them, more
higher volatility. Here you go. Okay.
Higher volatility.
Yep.
And buying stocks like this makes sense. But it's the implication.
Yeah, exactly.
Buying
association.
So what they are is it's small companies, value stocks. Mm-hmm. There is some evidence that quality or higher earnings it adds to a stock's quality for some reason, and momentum, that stocks that are rising continue to rise for a while, or they've tended to in the past, all past tense. But here's my problem with all this, is they make it appear it's a false comparison. For example, that last point you mentioned, plus the ever-present uncertainty surrounding knowing when to sell. There is no way that Fama or French's approach in any way, shape, manner, or form tells you when to sell.
Or which stocks to buy before it's too late.
This is so irresponsible.
Yeah, they just should not be associating themselves with Eugene Fama.
If
Walter Schloss, I don't know well enough to know what his advice is. And Benjamin Graham, who was the sort of inventor, if you will, of value investing, who at the end of his life came around and said, yeah, you could do all this, but you're going to do better just by buying the market. You'll be better off.
And they nowhere in here do they mention that these factors, when you focus on these factors, you have in the past, and it's all past tense, tended to increase your volatility in your portfolio. Yeah. That's why we believe in having those factors in portfolios, but you need to have a lot of stuff too. A lot more stuff to keep that volatility down, and they don't do it. They're just trying to get you to subscribe to their really pricey newsletter. It's $279 a year, but it was $429 a year.
Well, this is not as blasphemous as the other email they sent out. Remember they had the one that showed 1,000% a year or whatever return if you bought the stock.
Buying micro cap stocks.
Good Lord. I mean, it's so...
And they claimed, but here's what really, that one was egregious. What they claimed there is that if you bought their stocks, that the stocks they recommended went up like 1,200%.
Yeah.
But the reason they went up 1,200% is because when they put the stocks that hardly trade in their newsletter, their loyal readers went out and bought them, propelling the price higher. So it was an artificial increase in the price. People who bought the stock, like the last one who read their newsletter, who got it in the mail, like it was mail from Florida and got to Washington 6 weeks later.
Yeah.
The guy who read it in Washington bought it when it was up 1,200%.
Well, no, that should have been the sell indicator. I'm getting my newsletter. Get out of this stock right now. Anyway, I mean, the point of the matter is, again, AAII should be giving general advice to people about investing. They do not do that. What they do, even in the chapter here in Seattle, we know the people there. They're friendly. But what they do is
they're friendly.
They are. They like us. We've been there. We've spoken. But it's the idea du jour, right? It's the stock picker of the month. It's the new guy with the new... And I get it. They need to have some sort of momentum there, but people start believing that's how you invest for the long haul. And you shouldn't. The evidence is that you will not do as well as just buying an index fund. That's the bottom line.
This is my opinion. This is commentary from Don McDonald. I believe that AAII has gone from an organization that was devoted to educating investors to an organization that is devoted to enriching the insiders at the company, at the nonprofit.
That's a strong statement.
I believe that with all my heart, because why in the heck would you be charging $300 a year for a newsletter in a nonprofit organization? Why do you need that kind of money?
And I have no idea of the newsletter business today, how much, what does Dan Weiner charge for his Vanguard newsletter now?
I don't know. I used to charge $99 a year for my newsletter. Yeah. And I was making $300,000 a year off a $99 newsletter. I know that the guys at Stansberry are making millions off of their newsletters at $49 a pop. Millions.
Well, maybe we should be making a change.
The newsletter business is a very, very lucrative business.
And you can say anything in a newsletter. You're protected by the First Amendment.
Oh, that was my favorite part. You don't have to register with the SEC.
Right.
You can say any darn thing you want in a newsletter, and there is no one looking over your shoulder going, you can't say that. I could have recommended in my newsletter bad real estate partnerships. I could have, as long as it wasn't an outright scam.
Wasn't there another? Goodman. Yeah, I was going to say, wasn't there another media guy that did that? It didn't turn out well, but
he didn't just do it in a newsletter either. That's where he got in trouble.
Yeah.
He was actually collecting commissions.
A lot of commissions.
For example, if I had said in my newsletter, I really love Woodbridge, go out and buy it, and I had no financial ties to Woodbridge, no one would have any ability to come after me for that because I was protected by the First Amendment. The SEC couldn't come after me, nobody.
Yeah, that's right.
So these newsletters, trust me, they can say anything they want with impunity.
And will, by the way. to get the
and
eyeballs.
Most will, yeah. I would be. There are a couple of Stansberry Research. I think I'd run screaming from their newsletters. The other one is Banyan Hill out of Florida. They're another one that sells just whatever. If you want to trade futures, we'll sell you a newsletter for that. Whatever it is, we'll sell you a newsletter for that. There's a newsletter for that. 855-935-TALK is our number. Call, get a book, a copy of Financial Physics that doesn't tell you to do stupid things. It tells you to do smart things. And you get it free when you call the show at 855-935-TALK when we're live on Saturdays. Only when we're live on Saturdays.
Tom and Don are talking real money.
Tom and I believe in helping everybody become a better investor. That's why we offer lots of free knowledge at TalkingRealMoney.com.
Your guides to a really great financial future. Tom and Don are talking real money.
And if you're looking to get a decent income in retirement, if you really haven't saved enough, if you want ideas on how to build the wealth you need to generate that income, some ways to generate it in retirement without resorting to annuities. Tom's already taught one of these lunch ed classes this month, and it was a sellout. The one on May 1st is a sellout, so we scheduled 2 more. So get your tickets for either a lunch ed on a Wednesday, the 22nd, or brunch ed on the 11th of May at TalkingRealMoney.com.
We hope you realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately, consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestry, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. That's a wrap.